Hello everyone, welcome to this week's edition of the Fibonacci Review. Today we're looking at the Dow Jones Index and we're looking at the weekly chart. This is a long-term perspective and it's very good for those traders who want to buy into a market and hold it for weeks or months at a time. One of the things that we can do with the Fibonacci retracement tool is find support and resistance levels for future opportunities. Now, this will come when you can identify a major turning point, which in this case was back here in September 2022. And you can see that we had a double top here in 2025, January 2025. So what we have here is a significant resistance point. Now, what we can do is place the Fibonacci retracement tool between the low and the high. And then when the market confirms it's in a downtrend by breaking through the midpoint of the double tops. Now remember, this is a weekly chart, so it's very significant. This is just telling us now that the market is more likely to decline. And in this case, you can see it went from 44,900 all the way down to 36,800 on the index. Now, what was fabulous here was the 50% level, which WD Gann warned us about as being a crucial and important level to watch, was the last major low that the Dow made in April 2025. And from that point, which also happened to be very close to the previous peak here in January 2022, the market then found really good support and started to rally. Now from that point, the market has continued to rise and finally it's taken out this double top that we had through here. And one of the most common questions that I get asked is, well, once it breaks through the top, how do you manage the Fibonacci retracement from that point of view? And here's a really simple trick that I use when I'm looking at these markets. I simply take the peak or the high point of the Fibonacci tool and I just continue to move it up, and you can see that the 50% level that was here is now the 61.8% level if the market gets to around 49,000. Now it's not surprising in the least that for the last 1, 2, 3, 4, 5, 6 weeks or so, the Dow has not gone any further than the Fibonacci retracement tool, because what this is saying is that this low and this low and this top are all in Fibonacci proportion. You could also argue that these tops are also in proportion as well. So you've got a nice harmonic balance here with the Fibonacci ratios and the price movement. So what do we do for future levels? Well, now we can continue. All I'm going to do is to line these levels up as we pull this up with the next Fibonacci level. So what we'll do is we'll just grab this and you can see we can move this up and we can bring that to this point. Now if you notice this low, these tops are now at the halfway point. This low is on the 76.4, which just means that if the Dow should get to 54, it would be really important to watch for any kind of signal of weakness or loss of trend. But you can also see here that at 61.7, somewhere around that mark, if the Dow should get to that point, we'll be watching that again, because that will mean that all of these previous support and resistance levels are now in equal proportion. And it will give us the opportunity to watch to see what the market does. So having those levels in future gives you a little bit of a competitive edge to watch for any signal of exhaustion or weakness in the current trend, and you can then manage your trade much more efficiently because your decisions are based on mathematics and not on fear and hope. I hope that makes sense for you, and of course any questions or queries, you're welcome to send them through. See you again next week with another look at this fabulous Fibonacci technique in trading. Bye for now.